Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the Monday, the 2nd of December, into the last month of the year. Monday, the 2nd of December, 2024, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. We're going to go through our slightly different run through for a Monday. We're going to take a look at the calendar. What we've had, what we've got coming up. We'll also take a look at the slightly longer term outlook for the week, see where the potential trigger points are for the week, where the volatility points are for the week. Why do we do that when we're day trading at trade day? Because we want to see where the volatility points could come maybe early this week, later in the week, and you might adjust your trading style today because of what's coming down the line. So we'll take a look at that, what I like to call the shape of the week, look at the fundamentals, macroeconomics, the central bank events, take a quick look at the charts, what's going on in markets right here, right now. So let's start off with our macro matters and macro summary. So these go out at the weekend. They were out on the site yesterday. In the middle column, in the three columns below where you are, you'll see those. These go out every weekend, as I say. And this is just a summary, really, here of the macro matters. So the macro matters in here. Stock averages made new highs again. We had the holiday shortened week last week for the Thanksgiving holiday in the US, but the Dow Jones and S&P 500 managed to hit record levels. Basically, all the major indices, including the Nasdaq, posted their best month for 2024 in November. And often what happens in November runs into December. So looking for that rally to continue, looking for a Santa rally. So stocks significantly higher, did well. European, Asian stocks slightly underperforming through the month and last week, but nevertheless still looking resilient. We had the PCE, the Personal Consumption Expenditure data last week. Came in basically bang in line with expectations in here, so not spooking the markets. Obviously would have liked it to see it track lower. Remember, this is the Fed's inflation, their preferred inflation measure. So it came in bang in line with expectations. So markets kind of slight sigh of relief, but also I guess maybe slight disappointment as well. On Friday we had some positive news that would push the semiconductor sector higher in here. It sounds a bit counterintuitive, but basically restrictions, export restrictions on semiconductor equipment to China and AI memory chips. There was some more information about that come out from it's going to be put in place by the Biden administration before they leave office. And this, though, was seen as less. Final measures are expected to come soon from the Commerce Department, but they were seen as less restrictive than previously thought. So that's seen as a net positive. Okay, so even though they are restrictions, less strict, so therefore positive. And then going into this week now, we're looking at global PMI data Monday and Wednesday. Some of this already out from Europe. Go and take a look at that on today's data as well. And we get the US employment data on Friday. So a big week, global PMI Monday, Wednesday, and then US employment data on Friday. So a lot to look at this week. Also, it's not actually in here. We'll put it in next week's macro matters. But this week is the last week of Fed speakers. So this week we go on so I'll jump to that calendar now actually. But this week is the blackout. Here's the blackout calendar. I'll share the blackout calendar. So you guys can just Google blackout calendar, Fed blackout calendar. But here's the blackout calendar, and you'll see in here that we go into, where are we? No, that's not right. Where are we? Oh, here we go. So that's 23, 24, right? That's 23, I think. Here's 24, right? That's 25. Or maybe it's not. We're not into the blackout. Where are we? Monday the 2nd. No, it is. Yeah, sorry, no, it is. This is the last week. So the blackout starts on Saturday. Yeah, no, I was right. Sorry. I'm getting a little confusing myself there. This week is the last week. So you can see in here, blackout starts on Saturday. It's always a week and a half before the meeting. So the meeting is 17th and 18th. We get the decision from the Fed on the 18th. So it's a week and a half before that. So on the Saturday, this week is the last week. Monday through Friday this week is the last week we get any Fed speakers speaking on monetary policy. So then we're going to get blackout from next week. So it's a kind of important week, last kind of week we get of any kind of little thoughts that the Fed speakers may have about where they stand. So we're monitoring Fed speakers particularly as well throughout this week. So moving to the calendar, actually, then we get the global manufacturing PMI, as I said, today. UK retail sales tomorrow. Then we get global composite and service sector PMI on Wednesday. US factory orders on Wednesday. German factory orders, EU retail sales on Thursday, and then Friday, German industrial production, EU GDP, Canadian, but most importantly, US employment report. So really the big focus on the global manufacturing PMI and the global composite and services PMI Monday, Wednesday, as I said, and US employment reports on Friday. We don't get any real significant central bank activities, but watching the Fed members, as I said there. So yeah, what else have you? So if we look at today, you can see we've already had the European PMI data. You can see red in here. So France missing, Germany missing, Eurozone as a whole in line, and the UK missing. So negative numbers on those, really slightly disappointing. And going into this afternoon, that's going to be the focus. So remember, we do get the S&P global data before we get the ISM data from the US. So 9:45 Eastern time, the S&P global number. Remember, we already had the flash number on that, and usually it's relatively in line because we've already had the flash PMI back. It would have been, was it last? No, not last week, the week before. So we had that 2 weeks ago. I think we had the flash PMI number. So from S&P Global, we don't get that flash PMI number. So for the ISM, so this will be a first look at the ISM data, and the ISM data for the US is seen as more important than the data from S&P Global. So that comes 15 minutes later at 10 o'clock. So 9:45. S&P Global US Manufacturing PMI Eastern Time, 10 o'clock Eastern Time, the more important ISM data. 3:15 this afternoon, US Eastern, Waller is speaking, and we're watching out for Fed speakers as we go through this week. I'm just going to refresh this because this normally gives me, but it wasn't out. It's out now. It wasn't out when I prepped this all up just before. So this is the, I'm seeing this for myself for the first time. I saw the European stuff earlier on, but yeah, so Biden pardoning in his son Hunter, not really going to impact the markets in here. Trump's picked ahead the FBI, not really a big significant move for markets in here. The dollars, this is the main kind of news over the weekend or overnight, really. Dollars back higher, having lost some ground last week. Obviously, been on a tear since really October. So October, November, see massive US dollar gains as the Fed. The expectations are not as a dovish Fed. So the Fed has kind of shifted, and the expectations of the Fed have moved from very dovish to less dovish, so de facto more hawkish, and then that's seen the dollar strengthening here through October and November, throughout Q4 so far. Last week we saw a bit of respite on that, and a slight reversal of that, but not a reversal, more of a correction of that. However, this morning in here, the euro is weak again because France's budget crisis has worsened, going into a key debate in their parliament today. So the country's far-right national rally toughened its stance. So real issues in France getting their budget through. This is putting negative pressure on the euro, and so de facto dollar is up versus the euro. And often when we see euro down, dollar up, the dollar rallies against everything else as well. So general dollar strength we're seeing in the market this morning. That's been the real significant. I think most significant news we had overnight in here. Black Friday's bright spot. Happy because Black Friday consigned sales hit a record number in here, as slowing in-store traffic showed American shoppers taking more time to deliberate. What else have I got for you? So yeah, Europeans and stocks and euros slide amid the French political uncertainty. We've already mentioned that. German manufacturing data, that's that PMI data, downturn in November. We've already spoken about that, worse than expected. And futures in the US are just dipping slightly lower, or did dip slightly lower because of ahead of all the data we had this week, plus due to those European concerns to some extent. Dollar up as French turmoil grows, futures waver. So, and we've seen a dip and then a rebound in here so far this morning. I'm going to share this one with you. Hopefully you can get this. I mean, I've got a Bloomberg subscription, but this is basically, I think, a good, their bigger picture view in here from Bloomberg, and a roadmap through the drama and realities of a Trump's trade war. So maybe something to be reading and getting ahead of the game, so you kind of understand what's happened in the past and what might be happening going forward in the future. So I think this is really worth a kind of read for a prep of what we're going to expect as we go into next year, and no doubt trade tariffs coming on goods, particularly to Canada and Mexico and China and maybe elsewhere. So we're going to be monitoring that, obviously, as we go into January, post Trump's inauguration. Overnight, let's run through the overnights in here. Asian stocks actually higher in here by 0.8 for the Nikkei and nearly 2/3% for the Hang Seng. European exchanges actually up in a sort of counterintuitive way. Bad data. There's that German data PMI article there. Now, bad data, positive outcome. Euro's down as well. A weakened euro in here. And German manufacturing down in here, maybe making the risk of a maybe more ECB rate cuts more likely, and then that sees a counterintuitive as a positive. The CAC, the French CAC, not particularly down, given that a lot of these euro woes that we're seeing this morning, and most of the euro woes this morning are coming from that European in here, that European concerns around the French budget. And on the US, on the overnight, actually, I need to pop that out. What do we have for you? Just popping this up. Bear with me a sec. So we kind of mixed bag, really. Dow Jones hardly changed in here, as alongside all of them really. Look, we're pretty much unchanged. We did dip slightly lower and have rebounded since then. If we look at the Fed Watch tool, this is actually tracked back high. Remember, this has moved back down towards almost getting, it wasn't quite 50-50, but I think we went something like 55-45 on the chances of a rate cut. If you haven't used this before, I'm going to pop this into the chat in here. Oh, okay, I see some stuff in the chat. MS, wherever your real name is. Good to have you on board. Hope you're enjoying the webinar. Any feedback's welcome, and thank you for welcoming in Jim. So yeah, this is tracked down. So this is the chances of a rate cut at the 18th of December. You see the tabs here up at the top for those of you maybe new on the webinar. 18th of December in here, you can see this is tracked. This tracks the percentage chance. This is from the CME. And this is from their the forward curve, basically the interest rate curve for the euro-dollar contracts on the CME. So this is the chance of a rate cut pretty much going into the December meeting. So this is based off the 18th of December meeting. So there's a 65% chance. This has gone as low as 55%. So this is actually tracked slightly higher in here over the last few sessions. It's about the middle of last week in here, beginning of last week. This is back higher, so more chance of a rate cut, but still 60% around 65-35. If we go into the end of Q1 next year, chances in here now pretty even. If you see, so this, if we draw a line down the middle here, this is the chances on the right hand side of one rate cut or no rate cuts, and this is 2 rate cuts or 3 rate cuts. So you can see in here 40 plus 11, so it's 52% to 48%, right? So approximately nearly 50-50 chance of either 1 or 2 rate cuts now going into the end of Q1. And if we go to the trough, which I think is around July, let me see. That's 2 rate cuts now being priced. So it's 2 to 3 rate cuts now, Brian, as the trough in the up to 3 rate cuts actually there in September. And if we go by the end of the year, I think by the end of the year it's still sitting at 3 rate cuts. If it loads, why is it not loading? Here we go. Yeah, 3 rate cuts. So it's pretty much the market is pricing in 1 maybe at the end of this year, another 1 in the first quarter potentially, but 50-50 on that, and then maybe 1 more rate cut through the whole of next year. So and not maybe till July, maybe September sort of thing. So the market's very, very, I would say, quite on the dovish side, and that's what the Fed are telling us. It's going to be really interesting. We've got a ways to go, but that 18th of December meeting in here, because we get the dot plot chart then, remember. So that's when the Fed actually tells us what they see for the rates going forward into 2025, and we'll get a lot more detail in there. So it's going to be really interesting that we could see from the dot plot chart some significant movements in this and the expectation of rate cuts, and then also on the back of that, then obviously on the stock indices. So it's actually going to be quite interesting, the 18th of December meeting, because we don't know. It's not 50-50 at the moment. It's 65-35, but this has been close to 50-50 on whether we get a rate cut. And then also the guidance going into next year in here. So the power rate circus expectation always a weird rodeo. Never quite know how the chips will fall, but they'll at least tell us more. Probably closer, to the end of year. Yeah, so we get that. We get that exactly as I was saying there. We'll get that in the dot plot chart on the 18th of December. We'll get a much better idea of what the plans are for next year. While we're here talking about the fixed income and rates markets, this is the US 10-year yield. US 10-year yields continuing to track lower at the end of last week in here. So lower in yields. That's higher prices, lower yields. And if we go to if you go below where we are now in the left hand of the three columns, so the middle column, remember, had our macro watch, our fundamentals in here, and then on the left hand column we have our daily technicals in here, and this we shifted bullish on here at the end of last week. So we've been bearish, hanging on to bearish, although the market's been kind of sideways. But with the reversal, if you look right the way across the curve in here, we've been reversing above retracement levels, Dow theory levels in here on price, and trend lines in here. So we've seen a significant reversal in here on the upside on price for the bond markets is the 2s, 5s, 10s, and 30-year bonds, and so a lower yield bias. And lower yields, remember, supportive of stocks, so could be good for stocks going into this week. These lower yield moves. Stocks remain bullish in here. The S&P 500 right up at the recent highs in here. And nudging up at those. So we'll look at a little bit more depth. So we're staying bullish there, and Nasdaq bullish as well. We've got the lion's share back of the setback that we had from the previous highs from earlier in November, and pointing back higher again going into today. Quick look at the chart. So on the December, you see on Friday we had a strong close. Record close in here, record intraday high on Friday with hold on, a slight dip and a rebound in here. If we go look at the 30-minute chart, you see we had we flirted with this trend line. Remember, we drew these trend lines back. I think I did these just before the Thanksgiving. I think we put these up on Wednesday. So it kind of broke this trend line, but there's this shallower trend line. It's kind of flirting with and playing with this trend line in here on the ES. And sort of holding it, playing with it and flirting with it, and kind of gone down to that on the overnights and rebounding back off of it, so aiming back higher. On the NASDAQ in here, you can see, again, Friday we went back up to more recent highs from the last week or so, and then really eyeing now back up to the all-time high back in there that was posted back at the beginning of November. And we look on the 30-minute chart, again, this kind of shallower trend line, the steeper trend line's been broken, but then kind of playing with and flirting with this kind of other trend line, this lower trend line in here from the last week or so. Has breached that trend line, but trying to claw back above it. And again, this morning going down to that trend line and rebounded back up, even though we kind of violated it a few times. We violated and bounced back, and it's kind of using it as support again. And I think if Nasdaq can get back above 21, like 2120, 21020 in here, we could easily be back up to 2180, and then maybe up to 2200 today. Remember, we do have the whole we've got we've got the 2 data points today, so do keep an eye on those data points today. As previously said, all eyes going into today on the manufacturing data in here, the manufacturing PMI data. So 9:45 for the first one Eastern time, the S&P Global. More importantly, the ISM number that we get at 10 o'clock Eastern. So those are going to be the big focal points. They could be the trigger for the next significant move higher, in my opinion. But obviously, we have to see where those data points come in. All right, I'm going to leave it there, guys. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you with another bull versus bear webinar tomorrow. Bye.